It's Doug McIntyre, the editor-in-chief at 24/7 Wall Street, and I'm here with our market guru, our senior editor in charge of all corporations, stocks, market things, Lee Jackson. Lee, we're going to talk about our five favorite stocks right now, and we're at an odd point in the history of the market. NASDAQ is at a record. I would say it was pulled there by one stock, NVIDIA. I know that's not exactly true.
It's very close.
But to me, it's a AI-driven frenzy. The other point is that I don't think inflation's over. So, if people kept saying, well, I'm worried about inflation. Now everybody says there is no inflation. So let the market run. I think that assumption's wrong. So to me, the market has two things that are going to tend to push it down. And my list is going to have a little of that in it. So let me start.
Okay.
Stock that's take a horrible beating, historically, Apple. Why? No AI. Well, Apple has proven year after year that there is something up its sleeve. People are worried that they killed their car thing. They thought Apple was going to be the next Tesla. Didn't happen, pulled out, going to focus on AI.
So nobody wanted to build it.
No, listen, there were. If you look back at the history of EVs, they never had a chance. I mean, even Ford and those guys couldn't do it. Listen, no. It wasn't going to happen. So basically, what they announced to me is the optimism. It's the reason that you don't say it's going to go down forever, and that is that they're going to take AI and they're going to enable their devices. Now, Apple has 2.2 billion active devices in the world. So if you said to me, if I'm going to distribute anything at all, I don't care what it is, do I want to be the guy with the 2.2 billion devices? The answer is yes. If you think about what AI does, the ability to take, what Siri is right now and put it on ridiculous steroids, like, look at your screen and say, I want you to do a new Clint Eastwood film that's never been made. You just it's a Western and it happens on the moon. And suddenly, the
right,
person says an iPhone. 20 seconds later, they have a 2-hour movie they can watch. It violates everybody's copyright. There are lawsuits everywhere. But to me, Apple's a buy because their genie in a box is that they have not shown us their AI invention.
Yeah, and that Tim has the bench depth within the Apple world and can surely harness that depth with the right ideas. But sure, they should be sticking that into the iPhone and other devices at once.
Well, also a lot of the AI applications are free. I mean, a lot of this stuff is open source. So
right.
It's not like I got to go say, well, where can I find anything? A lot of what's available to do this kind of work is really the equivalent almost to being in the public domain. So I'm gonna take Apple for a second. Number 2,
all right,
Altria. Market gets kicked for some reason. I don't care. Altria's got a yield of almost 9.5%.
Right.
A lot of people don't like it because it's, they make coffin nails. People don't like sin stocks like that.
But people do like Marlboros.
People smoke. 95% of the cigarettes they sell are Marlboros. By far the number one cigarette brand in the world and one of the great brands anywhere. And it's a cash machine. I like these companies. What does it cost to make a cigarette, right? I mean, everybody has tobacco. Everybody's got paper. Everybody's got filters, but not everybody has Marlboro.
No.
So to me, it's a cash flow, leverage a commodity stock, which, I loved it all day long. Next pick, Goldman Sachs. People have been down on Goldman Sachs because they think that the CEO doesn't run it well.
There's some issues at the C-suite.
Everybody's going to leave. He's going to get fired. But here's the thing about Goldman Sachs. In some ways, it is like Apple and Marlboro. Goldman Sachs is still the gold standard in investment banking and trading.
Oh, absolutely.
If you talk about going to corporate customers, if you talk about going to family offices, if you want to do business somebody in the financial world, you say Bank of America or Goldman Sachs. Goldman Sachs still has that oomph that I like to see in a stock. If you see a reset in banks or investment banks, I'd still like to have Goldman.
And they have the kind of white glove cachet that the uber rich will always gravitate to, and that's where a lot of money is made. And in addition, the capital markets, where they are typically a leader, has been ultimately the slowest it's been in the last, say, 2 years, maybe 3 years, than I've ever seen it in the industry. And so that's been, when that comes back at all, that will be huge for Goldman Sachs.
Yeah. Next one, another company that's been beaten down that I like is General Motors. And here's why. The EV market is close to dead right now. I don't want to say it's dead.
Life support.
GM hasn't done a good job with EVs, but guess what? This is the resurrection of the gas, the fossil fuel engine, the internal combustion engine. What's going on in the EV market right now proves to me that if you're in the gas-powered car business, you said, I don't want to be in it, but now that you're still in it, it's great. They're still the number one car company in the United States. They've still got the brands. They've still got Chevy. They've still got, in Cadillac, they've got a premier brand.
And Buick has rallied, over the last couple of years with some good product. Yeah.
No. And so I'm going to say to you, something, I'd like to be in the gas powered car business. Okay. I that's the business I want to be in.
Yeah, I agree. And even if it's not strictly gas powered, what people will be more accepting of is a hybrid car.
Yeah, which they have a good market share in.
Yeah.
My last pick, another sort of odd pick, is ExxonMobil. I like ExxonMobil not just because it's got both upstream and downstream capacity. The price of oil is where you'd like it to be if you're one of these companies. And the other thing is that, look, the ESG whole thing has sort of died. So, the guy who's the head of Exxon was interviewed in Fortune 2 days ago, and he said, look, it's not our fault. It's all your all's fault. Why didn't you all go green? So Exxon is now so bold that they're saying, we're going to do this forever. You're not going to stop us. We're in the oil business. If you don't like it, it's tough luck.
Well, you're exactly right. They basically said, you've held the gun to our head for too long. It's not like when they had the cigarette CEOs, in front of Congress. I mean, this is something that affects everybody, and oil pricing affects everybody. And yeah, they're just not going to take it anymore, for lack of a better.
Right. And the way gas powered cars were going to go away, oil was supposed to go away. And guess what? It's not going away.
Never.
So those are my 5 favorites. Let's go over to you.
All right. Well, I have a pretty interesting list, some of which kind of mirrors your idea. One company I love is Energy Transfer, because again, while they're in the master limited partnership energy business, the price of oil typically, short of a crash, doesn't affect them, because they have pipelines that are long-term contracts, pipelines that cover hundreds of miles through the Southwest and then through Texas. And lastly, everything you just said is true. Oil will continue to be the leading fuel for engines, for the internal combustion engine. And that won't change, which will kind of get me to my second stock, which mirrors you again. I'm a big fan of Chevron, because I do think the integrateds are the place to be. And Chevron, like Exxon, with great upstream and downstream capacity, also has a huge LNG presence. Right. And I think that, once the rhetoric out of DC kind of taps the brakes on the LNG rhetoric, they will have huge export potential. And as you know, LNG is much more expensive outside of the United States, and so there's a big reason to ship to Europe and to ship to Asia. So that's one of the reasons I like Chevron. And like Energy Transfer, Chevron pays a solid 3.25, 3.5 dividend. Energy Transfer, up near 9%. So again, you've got that constant passive income coming in, and that always makes sense, especially in a market that's getting pricey. Now, for my number 3 pick, I'm kind of a fan of Pfizer. And I have to admit, I wasn't a fan of the whole COVID vaccine thing, but that's another story for another time. But their stock has been absolutely hammered. It's been cut in half. And again, this is Pfizer. This isn't some one-off biotech company that maybe has a phase 1 product. They still have vaccines for numerous conditions. They have a roster full of drugs that are used by physicians and hospitals, and the stock's trading with a 6% yield. And in addition to that, which we didn't even touch on, a lot of these stocks, like the ones you mentioned, investors can take a great dividend. They can sell covered calls on those positions to even up their passive income. And that helps. So I think Pfizer's a no-brainer. And check out the COVID thing. That was a huge run, and the stock was up over $50 a couple of years ago, in the 20s now. I think that's a solid bet. Another one that I am a huge fan of, and it may not be as well known, is a business development company, and the symbol is FSK. It's FSKKR, run by you remember them from the old days. They were the corporate raiders of corporate raiders. This is basically a BDC that will pay 90% of their earnings out to shareholders, and that dividends in the 12.5% range. Their numbers came in a little light, so they took some off the stock recently, but investors that are ready to jump in now will get a consistent dividend. The dividend per share has been in the area of 75 cents per share per quarter. And that's a big take home by, a well-known firm on Wall Street. Lastly, my last pick is boring, but it is Verizon. And I think that due to just the simple nature of their business and their 6.5 to 7% yield makes them a solid stock to own, especially if times get tough, because people will use their phones and people will continue to use their devices that require not only wireless capabilities, but also internet capabilities, which Verizon offers via a large fiber network that they started to install years ago. And lastly, there were some issues last year that were brought up about not only Verizon, but AT&T as well, about lead cables that have been buried, some of which were buried 30, 40, 50 years ago. Yeah. And why they made a big deal out of it, they also knocked the prices down a little bit. And if there have to be some remediation to solve some issues environmentally, they'll take care of it. But so far, people don't seem to care anymore. So I think Verizon is a solid dividend stock to grab that passive income, and will be there.
The other thing I like about Verizon, one of the reasons I like that choice a lot is that people talk about moats. If you take Verizon, AT&T, and T-Mobile in the United States, no one else is ever going to be in that business. They're always going to take, 1 or 2% market share from each other. Somebody's going to drop the price on the iPhone, but it may be 3 companies instead of 1, but it's the widest moat I can think of anywhere. You ain't getting in to the wireless business.
No, and even the bargain basement ones, the Crickets of the world, and they're owned by them anyway.
Yeah, so, they're brands. Yeah. They're owned by the big guys.
Yeah, they're the off brands for maybe the consumer that can't pay quite as much, but they want a plan. So there is no entry to that telecom business in the U.S. for sure.
Well, so anyway, for our viewers, if you're in the market and you're thinking about buying something, you've got between us 10 picks that I take a very careful look at, because we're taking into account not just the companies, but also the directions that the market might go. So
absolutely, Doug. Right.
We'll see you all soon. And Lee, thank you.
Hey, it was good to see you, Doug.
Good to see you.